Hello, everyone. I'm Matt Clark, research analyst for Money and Markets, here with this week's Stock Power podcast. Today's Power Stock is a great real estate investment. I'll tell you about more in just a second. It does score a 94 on our Stock Power rating system. But first, I want to let you know that my good friend and Money and Markets chief investment strategist Adam Odell and I know that a lot of you are worried right now, and it's totally understandable. But don't fear. Adam has created a special system to help you beat back inflation, protect your wealth, and even profit from the market's uncertainty. This is a recession-proof strategy. It helps you make money regardless of whatever direction stocks are going in. You can forget about all the fear-mongering and breathe easy. Adam's going to share everything you need to know during a special presentation on August 30th. If you just click the link above, you'll be able to reserve your spot to find out more about this great opportunity coming up on August 30th. Now, let's get to our Stock Power podcast. Now, to tamp down inflation, the Federal Reserve has increased interest rates. This is increasing the cost to buy a house, which is decreasing demand. According to real estate brokerage Redfin, 63,000 Americans backed out of home purchase agreements in July. 63,000. So of all the home purchase agreements made, 63,000 were backed out of in 1 month. That's the highest percentage on record, aside from the height of the pandemic in March and April of 2020. Now, the cooling of the housing market is pushing more Americans into multifamily properties like apartments, duplexes, even townhomes. Now, in today's episode of the Stock Power Podcast, I'm going to share a 94 rated power stock that owns a portfolio of multifamily real estate in some of the fastest growing markets in the United States. Real estate investment trusts, as I mentioned, or REITs, as they're commonly known, they give investors a great way to tap into the real estate market without actually buying property. Buying property is hard, and it's a lot of paperwork. REITs take away all that and make it very simple. REITs are basically companies that own or finance income-producing real estate across a lot of different property sectors. There's office REITs, there's industrial REITs, there's commercial REITs, there's residential real estate REITs, there's data center REITs, there's REITs across a lot of different real estate sectors. And a lot of them pay nice dividends to their shareholders as well. Now, the power stock I have for you is a REIT focused on multifamily housing properties in rapidly growing cities in the U.S. Again, it rates a strong bullish 94 on our stock power rating system. It just reported sales increase in the last quarter, making it 6 increases in a row. 6 quarters in a row, this company has reported sales increases, and the stock has jumped about 18.8% since hitting a 52-week low in June of 2022. Now, in the first half of this year, REITs, along with just about every stock on the market, slid due to inflation and recession fear. Talked about that earlier, and we've got a way to help you kind of get past those fears, but that's beside the point. But July saw a strong rebound for REITs. Now, the chart I'm showing you here shows the performance of the NAREIT REIT Index this year. Now, NAREIT is a specialty REIT company. It's not actually a REIT, but it does do a lot of REIT data, REIT performance, things like that. It basically tracks the REIT market. And they do have an index across many different REITs. This is all-encompassing REITs this year. In the first 6 months, the index had only 1 month of positive returns, and that was until last month. July's 8.7% positive return was the highest of the year, and I've got strong conviction that REITs aren't done yet. Now, in this episode, I'm going to share with you a strong bullish REIT, rates 94 overall. We expect it to beat the broader market by 3 times over the next 12 months. That stock is BSR Real Estate Investment. It trades over the counter, and the ticker is BSRTF. Now, this REIT trades over the counter because it's structured in Canada. However, all of its properties are located in the U.S., mostly in Texas, Austin, Dallas, Houston, San Antonio. And this is beneficial because more and more companies and people are actually moving to Texas, including Elon Musk and Tesla, because of the lower cost of living, no state income tax. All these quality of life measures are better in Texas than they are in places like California, on the West Coast, things like that. So you're seeing more companies and more people moving to Texas. Now, BSRTF scores a 94 on our proprietary stock power rating system. It means we're strong bullish on the stock and expect it to beat the broader market by at least 3 times over the next 12 months. After hitting a 52-week low in late June, the stock has rebounded. I'm going to talk more about that in just a bit, but I do want to point out the fact that BSRTF is a great value stock. It scores an 87 on that metric. The company's price to earnings ratio right now is 2.4, and that's more than 11 times lower than the actual REIT average of 26.9. Its price to cash flow is 2.5, while the industry average is 12.3. And all this tells us that BSRTF is a significantly undervalued stock compared to its REIT brethren. Now, its growth is also strong with a one-year annual earnings per share growth rate of 801.1% and a sales growth rate of 38.3% quarter over quarter. The stock is, like I said, moving up after hitting a 52-week low. So let's get into that here. It hit that 52-week low in the waning days of June 2022. Since then, the stock has run up about 18.8% off that low. Over the last 12 months, the stock is actually up 18%, a lot of it due in large part by this recent run-up, and it's besting its REIT peers, which are averaging a 0.2% loss over the same time. So, and BSR has also done a solid job in increasing its rental income, which is kind of crucial for real estate REITs over the last 4 years. In 2018, the company collected $64.1 million in revenue from income, rental income, I'll get it out, from its properties. The push by many Americans to move to Texas grew, and that income expanded 86.6% to $119.6 million last year. That increase in income helped BSR earn $283.2 million in net income in 2021, a 926% increase over the previous year. Now, Texas remains a very popular destination for people on the move, but interest rate hikes are pricing people out of buying a new house. So they're moving into apartments, townhomes, condos, things like that. And BSR's portfolio of property is located in some of the fastest growing areas, not just in Texas, but in the nation. Places like Austin, Dallas, Houston, San Antonio, these places are rapidly expanding. And this makes BSRTF a great addition for your portfolio. Now, let's shift gears and talk about our YouTube poll question. Last week's Stock Power podcast, I recommended a stock that operates travel centers and rest stops on major U.S. highways. So we asked you what your go-to pit stop was when you're on a road trip. Most of you, 39% of you, said that you stop wherever is the quickest. Basically, if you see a rest area, no matter what it is, you're going to pull over and stop if you need to. 33% said you stick to rest areas and quick stops for refueling. 24% said you're going to hit up travel centers like Buc-ee's, and I've actually never been to a Buc-ee's. Please don't hate me for that. And Love's. I have been to Love's, though. Never actually ever seen a Buc-ee's, which is kind of strange. I've traveled quite a bit, but I've never seen a Buc-ee's. Very interested in going in and checking one out. 4% of you said that you make a point to visit local attractions when you make pit stops on road trips, which is kind of interesting. We try to do the same thing. It doesn't always work out that way. But thank you to everyone who took part in our weekly poll. You can vote in our weekly poll on our YouTube page. Just go to our YouTube page, Money and Markets, and click on the community tab, and the poll question is usually right there up at the top. If you have any questions about a particular stock or the broader market or maybe even the economy, and you'd like Adam, Charles, or myself to address it in any of our upcoming videos, email us that question at feedback@moneyandmarkets.com. We'll put that right down below there, feedback@moneyandmarkets.com. We love to answer your questions, so send them in as often as you like. And if you do so, and we use that question in any of our upcoming videos, we're going to hook you up with some very cool Money and Markets gear. We've got hats, t-shirts, sweatshirts, all sorts of great stuff. We will hook you up with that just for submitting a question that we use in any of our upcoming videos. Also, head over to moneyandmarkets.com and sign up for our free daily e-letter. We give you safe, sound, smart, simple, adaptable, profitable investment information. You can also check out my Stock Power Daily. Monday through Friday, every day, I give you one stock that's highly rated that you should consider for your portfolio. And all that is on moneyandmarkets.com. You can also check out that proprietary Stock Power rating system that drives everything we do at Money and Markets. You can use our metrics to get the ratings of thousands of stocks. Go to the website, in the top right-hand corner of the homepage there, just type in a ticker, a company name, and you'll be able to see the rating of the stock, fundamental data, a stock chart. You can add stocks to your personal watch list, and you can do all that at moneyandmarkets.com. And you can do all that for free. That's all for me this week. Until next time, this is Money Markets research analyst and host of the Stock Power podcast, Matt Clark, wishing you all safe trading.